This channel is for educational purposes only. Please do your own due diligence before making any investment decisions. Hi, this is Joe Rabil, and I'm going to give you a stock market update today as of Thursday's close for Friday morning. I want to give a bullish scenario and a bearish scenario. I kind of want to lay it out for you and show where the key levels are and what I think is developing here. There's some conflicting data when you look at the market conditions, and I want to make sure we kind of all know what's taking place right now, what's improving and what's deteriorating. So let's go ahead and get into this. Now, as I mention each week, I always looking for a shift in these, and I actually could put this right about here, the overbought, oversold, which is now at 70. It's right on the outskirts of being overbought. If I like a close above 70 to actually call it negative, but we're getting really close there. The only problem is that the sentiment didn't shift this week. In fact, it actually got a little less bullish. So if we're looking for a real, negative signal, right? We're going to see this up in the low to mid 70s. And this will probably be up, I don't know, maybe closer to 20. And this will be up in the, the number of bulls will be number up maybe down in the mid to low 50s. So that'd be what I'm looking for. If we get those two things to take place, no matter what's going on here, I would be thinking we should be ready for some kind of a little pullback or correction. Now, if in fact we get these negative and we don't see any more improvement in this, then it could actually be something a little bit more significant to the downside because we haven't flipped enough to the positive side. Now, the only thing that shifted this week was the daily trend turned positive. This is the one thing I want to focus on a little bit today, and I want to make sure I'm giving this enough credit. And, I have mentioned that when these are declining, so we've got volatility decreasing on the daily chart and volatility just decreasing on the weekly chart. And when that's the case, I'm not looking for a big drop in the market. Just not. It's normally you'll get a drop first and then a rally back up. You'll get some sign this will start to tick up. You'll get a move to the upside first before we should be ready for some kind of a big drop in the market. So this is not the condition that I would expect a big violent move to the downside. Now, what we could do is push up a little bit more and then get the start of a move to the downside with some kind of a volatility burst, right? That's negative, and then get some kind of a retracement. And that's what I would be looking for. This line will turn up and this will kind of turn like that. We'd have to see the same thing show up, and it'd have to be pretty substantial to get this weekly line to start reversing. So the conditions that are in place here are really pretty bullish, especially when you look at it from a weekly standpoint. If we go and look at what happened at the peak for the market, the volatility increased, turned, and the 18 on the weekly ATR turned up before we even topped out at the beginning of 2022. So normally this is the way it plays out. There's a little bit of a volatility increase first. Right now we're dropping. So I think we have to temper our enthusiasm for some kind of a big drop to happen right away. So I wanted to make sure I covered that. I've been putting these as positive the last few weeks, but I really haven't emphasized what's going on here. So I do think we will see some form of increase in volatility first. Normally it'll be some kind of like a gap up that gives it all back, and it'll be a big bar. And the size of these bars, what this is telling us here, the reason why this is dropping is the size of these bars are small. It's not about the movement. It's about the size of the bars. And as long as these bars are small and these bars are small, these lines are going to keep dropping. So as long as that's the case, we don't typically. So if you think about it, like look at the way the size of these bars were really small, and then all of a sudden they started to increase. These got small here, and then look at how big they got here, started to increase there, and then we got a lot of high volatility. That's why this line was rising, right? But it started a little early. It was It was here on this initial drop that we started to see the volatility increase. So that's really what I'm on the lookout for in both time frames. Okay, so I wanted to make sure I spent a few minutes on that. All right, let's go ahead and get into the actual scenarios and the way this could play out, because I do think you have to frame it out in a way that lets you take advantage of either direction right now. We don't want to have a bias because we don't really have that strong a conviction on the weekly chart in either direction. I mean, we have an inside swing that developed. Here's the big swing. This was the last big swing, and then we made a lower high. See how this was a lower high, and then we came down and we just made a higher low. That's an inside swing. Okay, when you have an inside swing, you don't want to have a huge amount of conviction. Now, if we take out the high of this swing or take out the low of this swing, that would be pretty important. You see what I mean? So we've got this inside swing taking place. We're looking for a resolution there. If we get back above 4,100, it would be, and I know I'm using the S&P levels, but 4,100 is the high here for the S&P. It would be somewhat, my enthusiasm would be a little bit tempered because we're still below a declining 18-month as long as we stay below 4,200. All right, now, if I get above 4,200, what I'm looking for to feel a lot better about this would be the ADX actually crossing above 25. We have green, the buyers on the short term, showing improvement. There's no doubt about that. The buyers have a lot more strength right now than the sellers do. They are in command, but they're not very strong. Okay, it's just the sellers are really weak. They can't get above 25. There's not a lot of selling strength right now. Green DI is up around 34. I mean, that's not a bad reading, but it hasn't been consistent enough to get this ADX to cross above 25 and give us some sign that the momentum is really improving. So if we can start working our way up through 4,100 and see this line cross, then we can start to feel a little bit better about the ability for the 18 MA to hold on a pullback. Right now, we did hold last week, right? I mean, it was at a really key level, and last week I was basically at a point where if we showed any more weakness in breaking that 18 MA, I would have felt really bad about what this market was doing. And I'm always going to err on the side of being cautious and avoiding big drops. So I was trying to highlight that last week. But the fact is that, and I think I mentioned that, hoping it was a false alarm and that we'd hold the 18, and that's really what's happened here. Now, if we come back down through the 18 before getting the momentum going, we still have to be on alert. We're still below an 18-month, and now we'd be actually breaking the short-term trend by breaking the 18-day. Now, the way this is situated here, this is not this type of situation where I'd be selling a trend line break. It just doesn't have that look to it. This is not a counter trend rally because the 18-week is cupping around underneath. So if we were rallying up to a declining 18-week and this was showing an ABC rally to the upside and we were getting up, and even if we overran a little bit, then I might be a little bit more aggressive on a short trade. But this doesn't have any of those conditions in place. So what we're looking for if we're moving up is, number one, we have to get through 4,100. But we want to see, as we're getting through 4,100, we want to see this ADX climbing. That means a green DI is going to have to break out, and red DI is probably going to have to break down. We're going to need the red DI to sell off a little or decline a little bit to get this line to cross above 25. Now, I would like to see a little bit better volume action. You notice how we haven't had any abnormal volume bars through this whole period, and that it's not ideal. So that's the scenario right now where we've got this improving 18-week line turning up, and we've got the 18-day holding on a pullback. So if this can push up strong enough to get this ADX line going, then we have to start giving this credit that we actually could push through the 18-month line, and that the MACD is going to get through its zero line. Now let's look at this negative scenario, because if I'm looking at this time frame, I don't really have a trade set up. But if I look at these two time frames, I have a potential trade setup developing. And that would be as if this climbed up a little bit more and pushed up to the 18-month line. All right, we would have a rally to a declining 18 MA on one time frame, and then on the next time frame, we would have an ABC rally with a zero line reversal and low ADX. Do you see how this could develop? Now, if we go to a new high, one of my classic patterns would be, and we'd actually be using a trigger 1 out of my course, if it plays out that way, and this stays below, right around the zero line. And the way I look at it is, as long as if the MACD can cross above, but if the signal line stays below, then it would still be a number one trigger. And if that happens and we cross down through that, especially if we never see ADX get going on this time frame, then that would be a pretty strong trigger to the downside. Now, just so you know, I don't want to come in with a preconceived notion. I want to just stay back and look and watch the market and follow what I'm seeing and not what I believe. What I'm scared about, I'll tell you what I'm a little worried about, is I know on the 1st, next Wednesday, the Fed comes out again. And it seems like everyone's sort of the opinion that the Fed is going to start changing what they're saying, but I don't think the Fed's going to change what they're saying. That's just my opinion. But that doesn't even matter. My opinion doesn't matter here because I'm going to follow what the market is doing. And right now, if we get an ABC up, we don't get enough improvement here to cross above. We don't get enough improvement here to cross this above. And this stays low. We have our negative setup at a declining 18-month line. So I'm going to wait for a trigger. Now, if this just keeps pushing higher and if we keep pushing higher, this is eventually going to show an ADX breaking out. All right. And then it's going to spill over because the MACD is going to cross above the zero line. We're not going to have a zero line reversal potential because these lines are going to cross above. If that happens, then the next legitimate buying opportunity would be like a buy of this cupping around, and it'll be happening like this. It'll be like the 18-month is flattening out, and this will be coming back like that. So that would be the bullish scenario. I've already outlined the ABC bearish scenario. This is what we have to be on the lookout for. I mean, I'll keep updating you on this, but you want to think, I always tell my subscribers and the guys that I'm coaching, we want to think 2 or 3 moves ahead. Think like a chess player, and you want to think 2 or 3 moves ahead. We want to know what the scenarios are, and these are the ones that I would be focusing in on. If we get new momentum showing up in this market, we have to respect it. All right, you have to respect it. I know, you want to think that there's just no way the market can go up from here, but we're going to go by our price trend and momentum and follow that, and not have any too much preconceived notions about the way this is going to play out. All right, that's the update for the week. Go ahead and post any questions or comments. Thanks.